Good morning, good afternoon, good evening, and welcome to this month's edition of AML Voices brought to you by AML RightSource. I'm Elliot Berman, Marketing Thought Leadership Specialist here at AML RightSource, and I'll be your moderator today. We're glad you've joined us for today's session on Built to Last, how regulation is strengthening FinTechs. The regulatory landscape for FinTechs has never been more demanding. Stricter AML KYC requirements, evolving data privacy mandates, rising cybersecurity standards, and increasing licensing complexity. Today, we're going to reframe the compliance conversation, exploring how FinTech companies are turning regulatory rigor into a competitive advantage and why the firms that lean in are the ones that are built to last. We have an outstanding panel of experts, and I'll ask them to introduce themselves. Ken, and then Jared, and then Sabrina.
Thank you, Elliot. My name is Ken Freemstra. I am the global head of BSA AML and sanctions at Block. And under Block is our flagship brands of Cash App and Square. I'm pleased to be here today. Thank you.
Thank you, Ken. For those who don't know me, my name is Jared Terry. I'm the head of Financial Crime Program Integrity and Effectiveness at Stripe. And so within my role, I oversee our ability to manage investigative standards, quality frameworks, and AI-enabled tooling strategy, and then enables Stripe to manage our financial programs to scale consistently across our sanctions, due diligence, and AML programs globally. So I'm very excited to be here and to having this conversation and being on this panel with all these individuals.
Good morning, everyone. I'm Sabrina Chen. I currently lead the financial crime analytics practice in AML RightSource. And before that, I spent 11 years in Citi leading the global customer risk analytics program. I'm a boomerang consultant, so combined 18 years experience in financial crime, intersecting data science and the technology. Nice meeting everyone.
Thank you all. So kind of to set the context for today, we're really going to look at compliance as an enabler rather than just as a cost center. I know when compliance reported to me many years ago in a regional bank, the thing that we constantly reminded executive management was, you can't look at us just as a cost center. You have to look at us as enabling effective products and things like that. I think that same conversation continues. And now that we've got a rapidly expanding FinTech industry, we're having those same conversations. So that's a little bit of the context of what we're doing. And then we also want to focus on how FinTechs are rethinking compliance in a tech-driven world, and we're going to talk a lot about that. So our first theme is technology as a foundation. Again, FinTechs come to the party because of technology concepts, products, capabilities that they have. And so in this conversation, that's the foundation. And I guess I'm going to ask Jared to start responding. So how has technology fundamentally changed compliance in your organization? And in addition to your organization, I know each of you has a long history, some of which has been involved in traditional financial services. So you can, broaden the kind of the perspective.
Yeah, great question, Elliot. And, I always give this disclaimer, my opinions that I share here today are my own and don't necessarily reflect those of my employer. But the thing I will say about technology that we're seeing in the ecosystem is it is drastically changing how we do business and how we manage risk. When I started my career back in the day, I mean, we were using Excel sheets for everything. It was very manual. And today, AI is changing that game astronomically. The speed at which we're able to identify patterns, the amount of data that's available to us to make more informed decisions. And I think on top of all of that, the technology that's out there that enables us to move fast to identify risk and evaluate that and differentiating between the unknown versus suspicious. And so I think all of those capabilities to leverage technology in a much more rapid and effective manner, I think, are really out there in the marketplace for us from a technology perspective. And so whether that's enabling AI in how you're moving faster through cases and gathering information, enabling humans to make those final decisions, getting greater, clarity of like what actually risk looks like in an organization because you have the data and the speed to analyze that data. And so I think all of those things are really driving what we're seeing not only in organizations like mine, but across the ecosystem. And the traditional, institutions are also embracing this. We see many, many organizations having these conversations, not just financial institutions that are in the fintech side, but traditional institutions as well.
Ken?
I would break it up into two different parts. I first would talk about people. It's changing the way that people show up to work and who has access to this cutting edge technology. So when I think about like advanced technology, AI, et cetera, it would always be used historically in my prior careers for operational efficiencies, operational gains. The corporate employees now, regardless of what you're doing, are being enabled to use higher speed technology. Think about it when faxing moved to email. I'm no longer going from Slack and Jira. I have direct access to things that I historically wouldn't have. So it's accelerating my own decision making, getting access to data and underlying outcomes. That's one piece. And so that's changing the way compliance is coming to the table to enable the business to move faster. The other piece is outcome-based and processes. We're able to start taking, I think, what used to be historically siloed automation and connecting those more fast and in real time. It's really interesting to see how that's evolving. But I think the core thing is organizations are having to determine where the human stays in the loop along those processes. So where decisions would be made maybe in a week's time or a month's time, they're now being able to be made in a day's time or less. And it's like, how does humans constantly have oversight of those decision making?
Sabrina, I know you see a wide variety of organizations because of the practice we have. So, what are you seeing in this foundational space?
I've seen that our clients are across the institution, no matter it's TradFi or FinTech, they're getting more eager to not only making sure that they're not missing out on the most advanced technology to enable work, but also making sure that they're doing it fast while still with the right guardrails. And then that's where the compliance, the smart compliance kind of come in place and it kind of touch on what we talk about today, how to really leverage the regulation to actually make us confidently move forward. So that's what I see that they're very embracing the technology as well as the compliance with it. But I think they're also in the backside of the mind, they're worried about that the pace couldn't synchronize. But overall, I think the direction is very positive, and I'm glad to kind of just be along this journey with all of those.
I remember when we went through again more in traditional financial services. We went through another, I guess I'd say, a wave of new technology, and that was when large transaction monitoring systems came in, rule-based. And one of the things we found was um, the systems were identifying or alerting on potential things at a much higher rate than our operational infrastructure had been built to handle when most of the alerts were coming from um, spreadsheets, maybe a few rules-based things about transaction volumes in an account, or things coming from the customer-facing side of the business saying, boy, this was a little odd, and we don't know what to do with it, but we're sending you a post-it note about it. So are we seeing, with the ability of some of the new technologies that we're applying to all the data, are we seeing ourselves outstripping operational capability, at least for now? Are you seeing that happen?
Uh, I can jump in. Yeah, absolutely. At least there's no more post-it to pass on the messages. But the good thing is that I think right now the technology is way past that stage, and everything is our FinTech providers are actually very great at providing end-to-end life cycles. But however, those organizations that are using those great tools are not operationally ready yet. So maybe the cycle designed for the workflow is great, but the people organizational structure is not yet compatible with this flow, or the culture, the change management is not there. The detection maybe capture more alerts, actually the true positive alerts, but the dispositioning may not be ready operationally for many organizations. I think the capability is there, but that readiness takes more than just the technical capability to catch up.
Yeah, Ken and Jared, in your organizations, how are you managing or seeing that potential mismatch being managed so that we don't end up just pushing in a sense, pushing the problem to a different part of the organization?
I think from my perspective, I have a little bit of a different perspective than Sabrina on this one, that where I've seen not only organizations like myself, but others, is that we're leveraging data to really understand what is suspicious, to manage those populations a lot more effectively than we have in the past. And so, if we think about, we look of like 4 million plus SARs that have been filed to FinCEN every year. A lot of those are filed because I don't know what that looks like. I don't know what that donation comes from. I don't know what that rapid movement of funds was about. But the more that we are able to utilize data and the technology that's now available to us, the more we're actually being able to defend that that's not actually suspicious. That's not what money laundering looks like. And as a result of that, we're able to then tweak and tailor and tune our detection capabilities to actually identify the activity that really is suspicious, that merits that human intervention. And so by reducing the false positives through technology and data in a defensible way, and demonstrating why that technology works, we're then able to reduce the population of alerts that is immaterial or ineffective and focus on that really important populations. And what that has allowed us to do is then to maximize that human capital investment of resources. Of those are the reviews that actually are worth doing. And so as we think about that, that's how we approach it from a FinTech perspective in the industry, is that we're constantly looking at how do we defend our investigative rigor in providing actionable intelligence to law enforcement, while at the same time reducing the false positives of immaterial alerts or things that are just, I don't understand, versus it is indicative of suspicious activity.
Ken?
What I would add to it is going back to, I think, what Sabrina mentioned on two parts. One, on change management. It's more important than ever as you're deploying these new high-powered, high-detection models, syncing that up with your operational readiness, operational capacity planning, et cetera. It doesn't change best practices that should have been in place or should still be in place, but it's more important than ever because these models are detecting higher accuracy rates. So like you then need to ensure that as you're deploying automation upstream, that automation is flowing downstream to help you manage the end-to-end filing, et cetera, and so on. Again, it goes back to human in the loop, but there's so much potential for the automation piece to bring in the data, bring in the aggregation for the investigators. So that has to be synced up. Otherwise, you're going to create a giant volume of alerts through automation, and you're not going to have the right processes downstream to absorb the capacity that's needed to process that through. So I think that's number one. But then I think the real unlock for this technology and the tooling is the prevention piece. Now that you're detecting more, how is that feeding back into the program to understand what choke points need to change to prevent the activity from ever happening on your platform? And so all of that is coming together. I think it's colliding in real time in 2026. And it's going to be interesting to see where the industry goes in 2027 as those different collisions and priorities start manifesting and taking hold.
And that's a great segue into the next topic that we want to talk about, and that is turning detection into actionable intelligence. Again, we've had systems for a long time that can throw up alerts, and then you dig through and figure out what they are. And Jared, as you mentioned, there have been a lot of SARs filed, not maliciously, but I don't know what this is, and the rule seems to say if you're not, doesn't say if you're not sure, file, but you don't want to let something through. So when you really can't figure it out, even smart people scratching at it really hard, you probably made a file decision. Now we're really at a point where we can take detection and really turn it into actionable intelligence. And again, that gets us to a quality over quantity kind of view. So, in that environment, what does effective compliance look like? And Sabrina, I guess I'd start with you. How do you see clients across the spectrum starting to define um, effective compliance in this environment?
I think one big shift, like you already mentioned, the quality over quantity. I think another kind of similar analogy would be the efficiency versus effectiveness. I think a bit earlier in the maybe last year, it was very much because of the AI being dominantly available and helpful in making great things happen. I think that efficiency has become a lot of the pursuit. However, right now, I think that with recent many regulatory changes, as well as many of the success or failure stories, I think the effectiveness starts to be more of a focus among our clients here. By effectiveness, there are many ways you can define it, but ultimately, it's not trying to just check the box but with efficiency, check the box fast. It's really by looking at the outcomes to see if it truly improves your results, allow you to pivot quickly when regulation changes, and also whether in the same time still in balance check with the friction that you created for your customers. So that effectiveness, each institution has their own definition, but ultimately the high quality intelligence and the actually allowed operationalization to catch up with that actionable intelligence has become more of a focus.
Ken?
I think what I would say is that underpins the changing of technology of what is your risk exposure, your risk assessment, and your coverage assessments to really understand where risk is manifesting in your portfolio of products, clients, and ever evolving risk typologies. What I think is very fascinating for me as a practitioner is now being able to use technology and automation to absorb typologies in real time and then start thinking through how can you apply those evolving typologies into my risk assessment, into my coverage assessments, and then downstream into our detections programs. Before, like 10 years ago, I'd have a Google alert that would tell me when FinCEN published a new advisory notice, guidance, etc. And now I'm not even looking for that in my email. It's already being absorbed by an agent that's giving me a throughput that's telling me these are the things at a high level we believe you should consider. And so that's just evolving now. And it's like, how is that going to evolve even further in the next year to apply that then into my risk assessment and then further into our outcomes, which then gets to effectiveness. So we're in a rapidly evolving space with the new tools that are out there, but I'm excited to see how, and as a geek of compliance, can't wait until I have knobs that I can figuratively turn and I can see how all of this is changing my effectiveness in real time. And so being part of the build as well in 2026 is pretty exciting.
Jared?
Yeah, I think there's two parts that I look at when I think about effectiveness in our ecosystem. I think the first is really, and it builds off what Ken talked about, is the risk assessment data, the effectiveness of your investigative capabilities, really understanding like our ability to identify unusual activity, investigate it, and to report suspicious activity to law enforcement. And, with that data that we have and the speed we're able to get to it, whether it's the AI agents or the technology that we're building with LMs and so forth, that ability to move incredibly quickly to identify those risks, I think is really evident. We're seeing now. And with that capability, to be able to say, as you're looking at your risk exposure, this isn't relevant to us. We don't need to invest a lot of infrastructure in this particular risk, but this other area is very risky, and we do see exposure here, and we have the data to demonstrate that exposure, showing how you're enabling the business to say, I want to protect the business. This is where we should, and put those investment dollars into play. And so when you look at that effectiveness to be able to demonstrate to not only regulators and to auditors and so forth and financial partners, but also to the community of your boards and your senior leadership and folks like that, to be able to say, this is how we're using the dollars wisely of the organization to manage risk and to continue to give us that competitive edge in the market. I think the second part that we're also seeing is a dynamic shift with law enforcement of what they're considering valuable intelligence. They're becoming much more engaging with PPP efforts to share what is an effective SAR and how do they help us. We have programs like IRSCI First that are out there and supporting, like, what are they seeing in the marketplace that are actually leading to investigations and leading to conviction rates. And so as you partner these two components together of like what actually is leading to the investigative efforts that are priorities for law enforcement and national security, but you're also demonstrating to your own internal stakeholders the value of your program. And so I think both of those pieces together create this ability to demonstrate your program as being effective or where there's the areas for opportunity.
And I know you've all touched on this, but really what we're entering now is a time period where we're definitely making a shift from find everything to find what matters. And that was, when we turned on the big rule-based systems back quite a few years ago now, I think a lot of us were shocked to find, wow, all that stuff's going on. We're not sure what it is, but just we have to tune our rules and all that either. But when you got done doing all of that, there was still a pretty big pile of, we didn't realize that. I think we're way past that now with these new tools. And Jared, you just alluded to it. We can take the data and really figure out for each individual organization which ones really speak to their risk profile. Now, I will put a caveat in here. I think it's going to take a little while to see how this all flows through to the examination process, because we've certainly all seen in prior cycles that how things get looked at it in the actual examination process on the ground can be different than either we've designed our programs or we have interpreted the guidance or the regulations. So I'm hopeful, but I don't think that we're going to avoid that mismatch that'll have to be worked out through a couple of cycles. So that's my opinion from prior experience. I don't see anything in all of the new things that tell us, oh, and we've solved that problem too. And so while we're there, are you in your conversations with regulators, is there an indication that they're thinking about how some of the tools that you're using, they can use for more effective exams?
Yeah, maybe I'll start on that one. I was at a conference down in Miami a few weeks ago, and there was a regulatory panel. So all FRB and OCC and all of those folks were there, and they talked about this very topic. Elliot, so I think you're spot on with some of the assessments here. Is they're trying to navigate how do they incorporate these technology components into their evaluations? Like, what is the demonstration of effectiveness, and how do you get there? And so I think, whether it's a fintech or a traditional institution, I think the answer really comes down to, do you understand your data and your risk in such a way that you can communicate that effectively to a third-party examiner? And so the ability to say, yeah, we use data, but I can't, it's going to take 12 years to explain it, isn't really defensible. And so I think the ability to have very clean, articulated presentation, documented processes of how you do this and how it's defensible, I think helps support that. I think regulators, from the commentary that they have made in various forums, in webinars and conferences, is that they are actively looking at technology to better their programs and to the speed at which they are doing this too. And so the ability for them to be able to recognize that this is the environment we're operating in and this is how they can to make sure that we're operating effectively, I think is something they are actively considering. And so institutions like ours and around the world should be thinking about that as well, as how do we leverage our technology to demonstrate we're managing risk effectively.
To add on to what Jared was talking about, I think the FinTechs like Stripe and Block are at the forefront. And while we're being pioneers, we have to be stewards as well of the technology. And what I mean by that is sharing our lessons learned, sharing with the regulators where we may have moved too quickly and we're like course correcting. But as part of that, we're teaching them how to use the tools. We're showing them the value that the tools can bring in a safe and sound manner when used appropriately with the right governance. I think that just expanding further on what Jared was talking about is the key here of the defensibility, the explainability of how you got from point A to B, from B to C. While the regulations, I think in the US are still very much open to AI and we're defining it as we go, you can look towards Europe, for example, which I think have some pretty effectively strong positions on AI usage, especially in risk and compliance management, to really show where the industry will be heading. And regardless if it's this year, if it's next year, those are some solid principles that are coming out of the EU that can be applied to any risk and compliance program. So as you're building, that's the future. Like you decide how fast you want to get there or not, but leverage those principles because those principles will become law, and those laws will govern how you've designed your program.
Yeah, I agree. It is we have a global laboratory right now, and different labs are operating at different speeds. That's not a bad thing, actually, I think. Gives you a chance to test a few things. So that sort of, again, great segue takes us to there's a lot of new regulatory guidance going on. I guess what I'd ask you folks to talk about is, are new regulations accelerating innovation or are they actually slowing it down?
I can start. I'm a big advocate of the having the I think the flexibility and the innovation actually comes from disciplines, and we see those new changes are actually going towards the direction of making the umbrella bigger. So you have the room to have different interpretations, different actions to respond to that. However, that it's getting more and more from the monitoring perspective. The expectation is definitely actually higher, especially the recent. Some of them have not been put into formal regulation, but the proposal on reporting a frequency for the digital assets being weekly, that's just newly proposed. And also the fact that removing actually making fraud a part of the 314D to ensure to catch up with the new typologies that are really combining AML fraud in at least the bad actors are putting them into one typology, and the regulation is really enabling us as practitioners to have the ability to, or even have the expectation to actually start to report things that may be only fraud related. So all these changes of the regulations, I definitely think are enablers because it gives you space, yet it gives you a higher expectation. So another very small example on the model risk management, which is my field, the change from SR 11.7 to SR 26.2 after 15 years is really showing that the direction of the changes are towards less prescriptive. However, with a more demonstration expected from the practitioners, how you can prove you have the right governance. That applies to both non-AI, which is still part of the MRM framework, and also the AI, agentic AI components, which specifically get ruled out from SR 26.2. However, the expectation is still you are still responsible for the governance. So give us more responsibility, yet give us more flexibility.
The thing I would add, Sabrina, to the comment that you just made on the SR 26.2 is, especially for fintechs like Block, we have partner banks, we have other partners that we work with, and so you have to take in the flexibility, but then define the governance as you just said internally. But then it's like how you have to find a process, going back to people and process and the human in the loop. How is that getting back to the others in the ecosystem that are part of the products that you offer and the clients that you're servicing, to ensure everybody's on the same wavelength and understands how your models may be changing, how your detections are going to be modified going forward, that right oversight model and communication. And I keep saying this over and over again, but it's the human in the loop. How are we communicating across all the parties, either internally and externally, to ensure that like the outcomes as they change and evolve aren't like raising different bells and whistles in other areas of other programs, because you've tuned your model and it's gonna be different than what it was before, and that's okay, but that okay needs to be absorbed everywhere.
And we've seen in the first, what I'll call the first cycle of banking as a service, where a fintech partnered with a bank, in part usually for payment flow and things like that. And the banks didn't necessarily appreciate the complexity of what they were getting into. And when there were regulatory flags raised, many of them in the end came down to what you just talked about: good communication, clear governance rules, built in both to the contracts, but also into how the contracts were actually um, operationally handled. And those challenges aren't going away with these new changes. They're just setting kind of a different set of things we're going to talk about, but those same governance processes are going to be what turns out to be critical, I think. Jared?
Yeah, Elliot, on that point, I think, excuse me, I think on that point there, that's really spot on, right? It's, oh, excuse me, and it goes back to like understanding the risk of the organization, be able to demonstrate how you're managing that. And so when we think about all of the new regulatory guidance that has come out and proposed and more official and all of those things and frequently asked questions, there's a question that you have to be asking yourself is how does it apply to me? And some of these will apply more so than others. And I think as we look at some of these things, whether it's the 90-day SAR and continuous activity, how are you managing those populations more effectively? Are you actually reporting on continued suspicious activity, or you didn't know what it was, and so you just kept reporting on it continually? And so I think there's questions like that that need to be asked and to be effectively challenged in organizations. Where I think there's other ones, and we talked about the fraud one a little earlier, that is continuing to be the number one typology that the Department of Treasury has come out and said is precluding or you know, before we get to the money laundering, the word is elusive right now, but the predatory offense, right? As you think about that fraud that's occurring and the scale that's occurring with the utilization of more technology and AI, the scale of that is just astronomical. And so for the ability for organizations to share typologies and risks in a much more expedited fashion allows us to be able to combat that more effectively. And so I think as we're looking at some of these regulations that you have to understand, number one, what is the risk you're trying to manage at your organization, the scale you're trying to manage it at, and then also from that, how do you leverage these new guidances and technology and protocols for investigative frameworks to utilize to your advantage to manage that risk more effectively? And so I just think that's a big thing we're seeing with some of the regulatory changes is really understanding what risks does it apply to and how do you leverage it to benefit the organization.
So let's talk about the risk-based approach in practice. The concept of a risk-based approach has been kicking around for a long time. You can find it in print in the FFIEC manual, actually not just the current version, but the version before. And yet, it feels in some ways like I'll know it when I see it concept, which probably doesn't make it very operationally effective. So, um, how do you balance flexibility with regulatory expectations in a risk-based world? Jared, let's go back to you.
Yeah, when you think about risk-based approach, I think it again goes back to what are you actually doing with your product services and geographies you operate within. And so, to be able to say that this is where I operate in, these are the products I have, these are the services that I offer, but then be able to say, like, how could they actually be used to be exploited? And so to answer that question effectively, you have to know the typologies that can be utilized with those products. And so when I have conversations with peers and things like that, and they say, oh, well, this is what we're happening, it's like, how do you know that typology could be exploited? Or if you're in a meeting with peers and they say, oh, but this wouldn't apply to you. And it's like, no, but the typology can be adjusted to be leveraged. And what we see with criminal organizations everywhere is that once you close the gates by building better controls in the detection and investigative capabilities at organizations, they go to the next one and they try to adapt to whatever those controls are. And so when I think about risk-based controls, it is, do you understand the products that you have, who your users are, and then what are the typologies that could be exploited within that ecosystem that you have and the infrastructure? And so the ability to demonstrate that you are building a program not for your neighbor or your competitor, or however you want to look at it, but you're building it for your ecosystem. And to be able to demonstrate that to a third party of this is what the risk is, this is why it's the risk, and this is how we're managing that risk effectively. And I think that's really the conversation that I think as people have, you have a lot more freedom to manage that effectively.
Ken, how are you doing that at your shop?
Yeah, that's a great question. So I would thread what Jared was saying further because one thing that's top of mind to me as we introduce automation more so, and you think about like somebody that was looking at a KYC alert 5 years ago, they could see something that sanctions related, and because they're looking physically at the alert, and so they're going to send it over to another department. There's operational risk there, like that we're going to diminish because of automation. But in the same vein, you're not going to maybe have as many eyes on it along the way. So how do you, as you manage the typologies, make sure that as you're introducing an automated solution, it's consuming all typologies and not just one? So it knows where to be a conductor and route it to the right downstream detective persons, investigations, etc. So it's fascinating. And I think Jared hit the nail on the head. You have all of the typologies. And now as you're looking at those choke points for potential bad actors, it's that automation is now a conductor and getting it to the right place for outcome review and effectiveness. Um, and that I don't think I can say we haven't solved that as a silver bullet. There isn't a silver bullet, but it's a top of mind of mine because I want to constantly be like looking at those conductors or bots to ensure that I understand how they're working, how they're consuming the information, and how they're making any recommendations. Not making decisions, but making recommendations, because that's what we can fine tune more so. And as the threat landscape keeps expanding, you're going to have different typologies coming into those different conductors.
How do
Ken,
you, I'm sorry, go ahead, Jared.
yeah, just quick. So Ken, you said something there I think is really important is, we haven't won yet, or we haven't figured it out. There's no silver bullet. And I think the reason is because it's always adapting. And so I think where I get concerned is where I hear people of we do have it solved. It's like, well, they're going to change tomorrow. The tactics will change tomorrow. The typologies change tomorrow. And so I think it's the constant need of reassessing and reevaluating. So I love how you phrase that. Like there is no silver bullet. It's a constant effort to make sure you're managing that risk.
Mhm.
I want to
I was going to ask, how do you document it in this very fluid, I don't want to say constant, but very frequent changing environment? How do you document adequately what's going on in your flow management and all of those things so that if you get a question during an exam, not why did you do it that way, but explain to me what you're doing. You can actually not just tell the story, but show that you have done a defensible level of documentation.
I think that's where technology actually comes pretty handy. Majority of the new tools these days, the traceability, auditability, defensibility are getting much stronger than ever before. It's almost become a competitive advantage that you want to make sure you're getting the right to that really document everything. Having a person walking through the entire process end to end probably is one not as feasible as before, and second that there are so many things if you're really including AI in your process, there are things human actually cannot exactly document. Some of the decision plays if there's an algorithm in it. So I do think that the risk-based approach is something we talk about so many years. And it's getting in some way a little bit cliche, but it's still very important. Getting cliche is because sometimes we joke about that on conference because it's almost equivalent to risk-based approach means being selective, being um, do less. But in fact, with the technologies in the incorporation taking a dominant role, I actually think this is actually allowing us to be truly risk-based approach because we can actually train the bots, train the machine to how to be actually. I'm curious to know whether there's already some of those practice on training your bots to be knowing how to be risk-based approach.
I would say yes. And it is complicated. It is, I'm still learning. So going, I think back to what Jared was saying earlier, I am no expert in this, but it's having multiple people do the same alert and the bots doing the same alert and tuning continuously of like, did you get to the same outcome? Did you get to the same outcome? And it's like that. And it's taking the human decisioning with the bots and the evolution of what decisions multiple humans made and to get to the same outcome, and is your automated tools getting there as well. And I shouldn't use the word bot because we've had LLMs, we've had automation for a very long time. So it's really understanding like what type of automation are you using and what is the right oversight and MRM. And Sabrina, this is where I have to partner with people like you because again, I'm no expert. So I rely on people to tell me this is the right automated solution and this is the oversight we need of it. And from there, that defines like how you inform your automated outcomes with human decisioning.
Yeah, I think that this actually makes humans' decision more important and allow them to have the time and the energy to actually focus on giving that feedback to the LLM or bots. That whether you have done a good the appropriate decision or what might be the risk, and that kind of feedback allows bots or LLM to actually learn quickly and make maybe probably a better decision in some way. But of course, that feedback comes human, so it is still involving all those subject matter expertise from all of practitioners.
Yeah, I think that's right, and I think we're in a very exploratory stage right now of AI making decisions in incorporating that human element more so. Elliot asked the question at the very beginning of like, what was the difference of, in the days gone past compared to now with technology advancements? And it's like, when I started doing cases and I talked about the Excel spreadsheets, we were going to green screens and taking screenshots and putting it in a Word doc and
Right.
labeling it and attaching it and the whole 9 yards. And what's interesting about that, if we go back and kind of replay that, it was hours of just data collection and screenshots and writing up a narrative, and then at the very end, you read it and went, oh, yep, that makes sense why they did it. Or, nope, that looks unusual. Or, yeah, that's really suspicious. And so what we're doing with these capabilities is we're the first kind of wave you're seeing is eliminating that step of I don't need to go take screenshots anymore. I don't need to go to every data source in my system. I can go faster with that information gathering capability to bring that information in front of a human. And as we leverage Ken talked about, which I think is spot on, that data of comparing the humans making the decisions. When are the humans making that decision over and over and over again? So they can start applying that logic and building that capability. Again, I think that's where humans are going to be in the loop for a while to make sure we continue to do that. But that is where the feeding comes in, is so that we can make sure that humans are investing their time and actually making the decision of putting the dots together and saying, yes, I think this is suspicious, or no, I can explain it and this is why. But the ability to make that decision faster enables us not only to be more wise with the resources we're given as an organization, and create that competitive advantage, but it also enables us to get information back to law enforcement faster, to be able to file more accurate SARs, and to be able to do that process more effectively. Because if I can get to the answer faster and I'm getting those SARs faster, all of a sudden, like the data that's being provided to FinCEN and other FIUs around the world is much more enriched and much more timely. And so I think there's a component of that as well when you think about the speed and the technology and the defensibility of what we do.
Yeah, I
So,
would tie that back to your previous question, Elliot, about regulations and effectiveness, because you can see it's happening with the global targeting orders, with the Southwest border and CTRs. Because I just want bringing this full circle. Like those orders changed so quickly, faster than I've seen FinCEN issue revisions. And FinTechs, I think predominantly were the impacted companies related to these changes. And to me, that tells me we gave them data very quickly, that they were allowing, that it allowed them to like revise the regulation quickly to get them what they need for investigations. They obviously knew something was happening. And this data revision over, I think, 3 times in 1 year, and our reporting on it is somehow, and I'm still waiting for the news article on like the Wall Street Journal, but really like something allowed regulation and the law enforcement to make those revisions quickly. And we're giving them that data and we're able to implement it because of the automated tools and revisions. Like I don't want to date myself, but I remember when new regs like would come out and I would freak out. I'm like, how are we going to do that in 90 days? And now we're able to make the modifications needed and test them and have controls around them in less than 90 days. And that's just really exciting to see how we're able to pivot in real time on these things.
We have to change the operating model, because that really different, that kind of much more rapid loop really make that a differentiation between the organizations that can respond and integrate quickly with a mature operating model compared to those who are more used to the prescriptive directions that really just follow what was said, exactly said, and the take every time there's a change, take 20 committees to make decisions on how each part. And before they make the decision, I think the new change is already there. But we do see that across the organizations. Some are more technology or enabled or more kind of operation ready ones are taking a leap from this alternative, while those who are more traditional or legacy focus are taking a bit of the hit. But either way, I think this is towards the right direction that we want to be.
where are FinTechs still struggling to operationalize innovation?
That's a good question. From my perspective, FinTechs are still evolving processes. Like we move quickly, and with automation, you need to move quickly with intention, and it needs to be across the organization. So like the left hand constantly needs to be talking to the right and vice versa. And where I think in TradFis, they move slower. And as a result, everybody's aware because of 5 levels of committees before something happens. FinTech is the opposite. So there's a middle ground there. I don't think that level of bureaucracy and red tape is healthy for innovation and business in general. But also the left hand has to be in lockstep. It's like a baton in a race. You got to make sure the other person's grabbing that baton and there's no drops along the way. So I think I wouldn't say struggling, but evolving is the word I would use, Elliot.
Okay, that's fair.
Yeah, I would agree with that. I think it's an evolving process. I mean, when you look at fintechs holistically, it's a combination of a variety of different backgrounds. You have people who come from traditional banking, and you have people who come from engineering and product, and all of these different perspectives coming together with the idea and the mandate to move quick and to get to the market and to do that. And so to bring everyone along on the journey, I think is where that partnership becomes so invaluable. And so the organizations that do this very successfully are the ones that are partnering together, where engineering is talking with product and product is talking with strategy and strategy is talking with ops, and they're in the rooms together. They're thinking about, how do I solve this problem, not just from a procedural perspective or a tooling perspective, but a holistic perspective. And I think that's where that type of mentality is where we see organizations do really well in the fintech space, is those that are embracing that collective working together. And I think that's where like the defensibility comes in, because you've thought through the challenges that are going to lie ahead. So when you start launching a product or in a new geography and you're like, oh, I don't have that rule, or I don't have that monitoring capability, now you're behind the 8 ball. Whereas if you're partnering together and you're thinking through this, you're going to have that. And I think the evolution part, and again, completely agree with Ken on this one, is it's the education part. You're educating people of why these risks exist and why we do the things that we do. And so I think that's where that partnership and being able to like explain why we do things, and I think just goes to show why the regulations that we get are so important, because it demonstrates the why behind it, and supporting some of that understanding of the genesis of why we do what we do.
To echo that point, I think that explain or education and why it's important. I would imagine myself has never worked for a fintech, but from what I hear from clients like you guys and other industry peers, what I learned is that the compliance culture probably in fintech can, especially smaller ones, can be more of a challenge to allow compliance to always catch up. And especially to scale, because there are, bare bones that we have to follow, fintechs have to follow and then to comply with. But once there's any change, how embracing the engineers or product team may be for something that's what we call nice to have, or maybe more future proof. They may be more focused on how can we drive the product release faster with the minimal compliance requirements being met. So that's what I do hear in some smaller fintechs, that when the compliance professional feel it's very hard to build that culture to allow that kind of compliance awareness and implementation to be more naturally integrated. It's always a catch up, and it's always a convincing game. So that's what I hear. But maybe Ken and Jared can improve. Although both of your organizations are very big and mature, probably it's way past that stage.
What I would say is technology and automation is enabling compliance to demonstrate more than just data. Like, we're able to bring together data across multiple different areas of an organization. And I'm not just talking about client data or an investigation data. It's allowing more of a holistic conversation. But I think what we are doing at Block, and I am imagining most more mature fintechs or those that are building are doing, is we're able to take the principles of like an ERM program where you have an L1 and an L2 risk. L3 typically is where BSA, AML, and sanctions come in, and then your typologies are 4. Like, we're building that framework, right? And so as there's changes to our products, detections, and models, we're going to be able to like look at that all in real time, which I've never seen anything like that before at any of the organizations I come from. And we're able to use technology to build that quickly. And so, like, it's setting that foundation first that then drives the cultural change where people can start seeing the value of compliance and how to manage that risk in real time. And then you're connecting all of that underlying bedrock foundation to your automation, your bots, et cetera. So as they're playing conductor, they're going to be able to tie all this back up to MIS reporting to your board and senior management.
That's a good point about the foundation. I just wonder if those smaller or newer firms, whether they even have the luxury and afford that time to even build that foundation to prove the value. But it is a very good point.
If you
Driving
don't build it right the first time and you're hitting the word on it, builder, like compliance is builders now. It's not just engineers. So it's showing what you're building and how what you're building may not be ready for prime time today, but it's going to allow the business, you're going to enable the business to grow so much faster when you have that foundation in place.
Jared?
Yeah. I think really quickly on that, when I think about how do you build a culture of compliance, I think it starts with speaking the same language. And so I think in a big part of it, when it's organizations that are coming through and saying, well, this is what the regulation says, but the business doesn't know what that means. Like they haven't spent 15 years in our field and know what the impact is. And so to bridge that gap with them, to help them understand how does this specifically align to us as an organization. So I think speaking the same language and how does it help the business? How does it manage risk of the business? How does it make us more competitive? Those are the kind of conversations that land much more effectively than otherwise. And I think Ken put it in the right way is that we're building processes. I mean, all these fintechs you see out here, we're all small at some point, and they had to figure these things out too. And so when I think about the small organizations, it is about how do you lean into this conversation of data and technology to be able to have those same conversations with the same language.
All right, we've got just a few minutes left. I'm going to go to each of you and ask you for one takeaway. So, Ken, one takeaway.
Couldn't find the unmute button. That's not my takeaway. What I would say is here, as we look forward into the next 5 years, even, it's building for the future, documenting decisions, and understanding what risk can be automated and where the human must stay in the loop versus what risk you're comfortable streamlining, and allowing tooling to make the decisions for you. Because I don't think we're in a position today where humans can be taken out of the loop, but there will be a day where we're going to automate more than we do today. So it's setting that conversation up front of like, where are we going to bifurcate those? And then what will it take for allowing that lower risk typology to go straight through processing potentially? And what do you need to do to get there to be comfortable with that? And that would be my
Sabrina.
takeaway.
Oh, sorry, Sabrina.
My takeaway is that build your intelligence in the operation workflows, sustainable, scalable, and explainable.
Jared.
Yeah, I think for me, it really comes down to be willing to ask the questions that you need to ask. And I think that really comes down to challenge what you built 5 years ago. Is it still fit for purpose? Are you asking the right questions for your users? Or do you have the right technology still in place? Are you thinking through as fast as you need to be thinking through things? But I think be willing to ask the questions that you need to ask. And so as you think about that, engaging your stakeholders with eng and product and ops and strategy and across the board to really make sure you're asking those questions. And I think as you ask the questions, you'll start finding answers, and some will be the directions you don't want to go, and others are the right directions. But as you ask those questions, you'll find the directions you need to be going.
So possibly a new corporate position, chief contrarian, might be a good thing to have on all of our teams. So I'm going to thank each of you, Ken, Jarrett, and Sabrina, for your thoughts, your insights, and the practical guidance We want to thank everyone who joined us today for this edition, and we hope that everyone in our audience found the discussion valuable and thought-provoking. If you'd like to revisit today's session or share it with your team, the recording will be available soon on our AML Voices webinar page on our website. In July, we'll discuss AI and financial compliance, building smarter, faster, and more reliably. That session will be streamed on July 22nd at 1 p.m. Eastern Time, and you can register for the July webinar and check out our other resources at amlrightsource.com. On behalf of all of us at AML RightSource, thank you again for being with us. Stay safe, stay compliant, and we'll see you next time on AML Compliance.